Hello, good morning and welcome. You've tuned into ET Now and you're watching Buy Now, Sell Now with me, Varun Hiremat, and along with me, Karunya Rao. Let's take a quick glance at the markets. Of course, the losing mood is continuing. Nifty is down 110 points. Banking index, financial services index really dragging today. HDFC and Kotak top losers on the Nifty. Tech M, Wipro also sliding big today. So IT also taking a bit of a breather, which has otherwise been quite resilient. While we have recovered a fair bit from the morning lows, we're still nowhere near where we've been recently. So let's see, third days of bears in charge, and perhaps the wall of worry is getting a little tougher to climb now for our equity markets, Karunya.
Right, let's pull up the BNS and stock cloud as well to help our viewers understand which stocks should they be focusing on and keep on their watch list in today's trading session. Most of them, are earnings candidates. Let me begin with NHUL as well as the United Spirits, both looking pretty weak in trade at this juncture. They're both reacting to the Q3 performance. The report card was handed in late last evening. You also have an Axis Bank, which is bucking the overall trend in the market. The stock is up a solid 2.5% as we speak, on the back of a good set of numbers and good brokerage reactions coming in this morning. PNB Housing, another name from the financial basket to keep on your radar on the back of its Q3 performance. You also have some update coming in from NALCO. They held a board meeting yesterday and they have approved the plan for buyback. PVR has updated the buses about their QIP, and the floor price has also been set. So that's an update that's keeping the stock of PVR a buzz. Let's also understand which are the stocks to focus on as far as today's earnings are concerned. Lupin and Maruti, both important ones to watch out for. You also have another name from the auto index, M&M, to keep on your radar. CLSA says the recovery in core business and better ROEs should drive stocks re-rating going ahead. There's MMTC also in the limelight. Deepam has invited bids for divestment of the equity held by CPSEs as well as state PSUs in the JV company held by MMTC. Overall, these are the top stocks to watch out for in today's trading session. Let's take it across to our guests, Kunal Bothra as well as Ashish Maheshwari. Morning, gentlemen. Kunal, I'll straight get on to your stock ideas for the day. What are the stocks on your radar?
Well, I'm expecting the markets to stabilize with buy calls, especially with the budget. The first one is bond technologies, of 15,100. Stock has come back to a moving average. Actually, was a mean reversion point, 14,300. And second is a buy on Tata Motors, expecting that the stock would probably come back to its prime and this consolidation, the flash correction would be over for Tata Motors. Please buy with that 300 and stop at 240.
Okay, thanks for that, Kunal. Hi, Ashish. Good morning. What stocks are on your radar today?
Yeah, a couple of stocks to suggest while keeping in budget in mind. So my first stock is HDFC. In my view, stock has already corrected almost 300 rupees from 52-week high, which has touched recently. And now in this correction, is the right time to buy this stock. And again, the rationale is in this budget, we are expecting some announcements which will come related to real estate and housing. And the biggest beneficiary is going to be HDFC. And if government also tweaks some interest on home loan related matter also, so I think HDFC is going to be biggest beneficiary. So 2,400 rupees is a good buy in my view, and post budget we are going to again see 2,700 odd levels. Another idea which I like is Mahindra and Mahindra. Again, this is a stock which has slightly corrected from the recent peak which a stock has seen, and again one of the going to be beneficiary in this budget per se, because first of all government is going to give a lot of impetus on rural spending, and M&M is going to be major beneficiary there because they are present in almost every space in agriculture as such, from farm equipment to all other activities. And the kind of their momentum is there in tractor sales on account of good Kharif and Rabi season and lower interest rate, along with like the two EV vehicles which they are manufacturing, and I'm expecting some more announcement as far as EVs are concerned in this budget. So Mahindra and Mahindra is trying to gain on all those fronts. And compared to other stocks in same space, it has really not performed that well so far. So my next pick is Mahindra and Mahindra. I'm expecting 1,000 rupees in this stock in the next 6 months.
All right, Ashish, thanks for that. Just for the sake of our viewers, please know these are the budget picks from both our experts, and we request you to stay on with us for a bit. We're going to take a quick break, but when we come back, we'll catch up with the managements of Bank of Baroda and Canara Bank, and then we'll have some viewer queries as well. Stay tuned.
Welcome back. You're still watching Buy Now, Sell Now on ET Now. We're in the thick of the earnings season. It's time to touch base with some of the key earnings candidates. Let's start with Bank of Baroda. The stock is down solid 7%, and this is despite the bank being back in profits YOY. Robust advance growth also is something that they've reported for the quarter gone by. So let's understand what exactly transpired. What's the way forward? Sanjeev Chadha joins us right now. He's the MD of the bank. Mr. Chadha, thank you so much for speaking to us. What were the factors that aided your strong performance this time around?
So if you look at the operating profit improvement, which is up about 13% YOY, it has been helped both by the growth in loans on the asset side, as well as tight control on the liability structure. So we have been very clear that in a low, in a very abundant liquidity situation, you need to have discipline as far as deposit growth is concerned. Make sure it is aligned to loan growth, and also, to the extent possible, make sure it is low cost. So I think that's worked well. Our deposit growth at about 6.5% is almost exactly the same as our loan growth. In fact, if you look at the domestic book, the credit deposit ratio has gone up, and there, overwhelming proportion of growth has come from CASA. CASA, in fact, has been growing 12 to 13%, and within that, current accounts have grown 18%. So I think that has been a big contribution, that while there still remains pressure as far as yields on loans is concerned, we have been able to offset that by a lowering of the cost of liabilities. On the asset side, because of abundant liquidity, there is a lot of pressure in terms of margins when it comes to highly rated borrowers. The top rated borrowers are today borrowing at a cost which is possibly lowest that you have ever seen. So therefore, it does make sense to make sure that a large proportion of the retail loans, they actually contribute to the growth. So a larger proportion of a loan growth has come from secured retail loans, which gives you both the comfort in terms of asset quality, having historically very low rates of loss given default, and also in terms of margins. As of now, they give you far better margins as compared to the highest rated corporates. So I think these are two factors that really have helped us protect our margins and improve our operating profit. A, making sure that when it comes to loan growth, you grow mostly retail loans, and corporate loans are largely a way of liquidity management. And in terms of the liability franchise, it contributes by way of delivering on the CASA growth.
Pro forma NPAs have been well provisioned for. What is the outlook from here on?
So we have been fairly conservative in terms of provisioning practices. As of now, we carry a provision coverage ratio of about 85%. 93% of NCLT accounts are provisioned. And even if, as far as the current quarter is concerned, we have remained conservative, which means we have fully provided for all pro forma NPAs, which are accounts which would have slipped to NPAs, but for the Supreme Court stay, which remains in place. Also, when it comes to other loan categories, we have made sure that the provisions are in place. We also need to understand that when it comes to elevated provisioning and slippages this quarter, there is also an aggregation of, you might say, stresses which were playing out in previous quarters, but there, because of the moratorium and because of the Supreme Court judgment, they could not get fully expressed. In fact, if you were to aggregate these slippages, when it comes to the first 3 quarters of FY20, they were higher than what they have been in FY21, but still, I think they are elevated as this quarter is concerned, and we do expect that going ahead they should trend downwards.
Right, sir. And then, on asset quality, what's the outlook from here on out? Are you starting to see any stress in the retail book, and how is corporate faring?
So two parts. One is that when it comes to the pro forma NPAs, now these are loan accounts which actually need to be provided for as per RBI guidelines. It's only because there's a Supreme Court stay, you cannot call them NPAs. But nevertheless, at some point in time, they will be recognized NPAs. So it's only prudent that you provide fully for them. So which is what we have done. Now, BOB does remain conservative in some respects. For instance, again, we provide 20% against substandard assets as compared to 15% which the RBI requires. But that's a board-mandated policy which is in place. And I think that gives us the cushion in terms of any future stress going forward. So we are fairly comfortable in terms of what are provisions that we hold. In terms of the possibility of release of some of those provisions, I think maybe again we should look at that a couple of quarters onwards, because if we look at the March quarter and the June quarter, I think there are two things which will play out. One, of course, is the restructuring which will happen. And number two, I think when it comes to the MSME and retail book, I think, and particularly the retail book, where the restructuring has been very small. So therefore, there does remain a possibility, if one has to be cautious, that there could be some stress in retail, which could actually play out in the coming quarters. We are fairly confident in terms of how the corporate book is, which has accounted for the overwhelming proportion of provisioning in the past. And we believe that is something that should trend downwards going ahead. But to some extent, that slack could be taken up by some elevated slippages in MSME and retail, simply because of the uncertainty and our inability to actually have a very accurate forecast in terms of how that book will play out.
Right, Sanjeev. So, and on credit growth outlook from here on out, how are you going to grow credit while managing stress with the capital that you have, and what kind of loan growth can you clock?
So I think for us, there had been two challenges. One was common for everybody, which was COVID. And then we, of course, were executing on our merger with Canara Bank and Vijaya Bank. So in December, we completed that merger in all respects. So as of now, all the platforms are completely integrated. And despite executing the merger, actually, we have been able to grow our loan book at better than market. Our domestic loan growth is about 8.2%. The market is about 2 percentage points slower. So therefore, we expect that in the coming year, given the fact that the kind of distractions that the merger could have produced, they are behind us, we do believe that we should continue to grow better than market as far as loans are concerned.
Do you think corporate credit and capex are on a revival trend? What is your view there?
So I think as far as corporate is concerned, it is really a function of two things. One is, again, the investment cycle coming back as far as the corporate sector is concerned. Now that it's still early days, and I think in terms of new projects, we still have to see any large traction there, although some signs are visible in terms of investment plans. So that's something which, once it takes off, that should help in terms of corporate loan growth. The second piece, of course, is the kind of pricing distortions which have been produced by the excess liquidity. So you are not getting the requisite margins in terms of what a risk-adjusted return would require when it comes to the highly rated corporates, which is why that one needs to be disciplined there if one needs to protect one's margins. So I do think with the short-term liquidity situation tightening a little bit, we should get some pricing power back, which allows us to address the corporate segment profitably. And along with the investment cycle also reviving, that should give us opportunities in the next financial year, particularly the second half.
Mr. Chadha, recoveries have improved significantly this quarter. Do you see any NCLT accounts that might be eligible for a recovery over the near term?
So I think even when you look at this quarter, the recoveries have improved significantly as compared to previous quarters. And there seems to be the possibility that there could be some additional tailwind from some NCLT cases which have been long pending, getting sorted out in next quarter or two. The third piece, which again should help, is that of the pro forma NPAs, there are significant proportion where restructuring has been invoked in terms of the Kamath Committee. Now, once that restructuring is successfully executed, these accounts again remain standard, and also the provision which is available there, that 10% provision that we'll be making, that also gets written back. And if there are NPAs, is the 20% provision that gets written back. So I think there are a few positives that we can hope for in the coming quarters.
Right, sir. And then finally, your current capital adequacy just above 13%. Will it be able to enable you to grow in the near to middle term while also providing extensively if provisions are going to remain elevated going forward?
So if you were to look at the current position and if you were to add back the profits we have made in the first 3 quarters and the 81 bond that we have raised about 3,700 crores in the first 9 months. Then our capital adequacy ratio would be about 13.3, 13.4%, which is actually higher than what we started the year at, which was about 13.26%. So we have been able to both provision as well as fund the growth, which has been better than market, through these means. And going ahead also, we believe that should be possible. We are additionally looking at the possibility of raising about 2,000 to 4,000 crores by way of a QIP in this current quarter. So that added to our internal accruals, we believe should be adequate both to take care of any residual stresses as well as to fund growth as per our growth ambitions.
All right, Sanjeev. So thanks so much for taking out the time to chat with us this morning. It was great to get perspective on the latest developments at Bank of Baroda. Stock clearly under pressure this morning, but fairly stable set and some good commentary from the management. Thank you once again.
It is clear that we can see a budget like never before.
With the finance minister promising a budget like never before, expectations are soaring high. From income tax deductions to creating jobs to boosting healthcare, will this budget meet India's expectations? Catch all the action of Budget 2021, Vaccine for Growth, only on ET Now.
Well, the budget is definitely on everyone's radar, and very soon we should know what's in store for us and for all the various sectors of our economy. But this morning in BNSN today is a little more about what's happened with earnings. We just spoke to Bank of Baroda. We're now joined by the management of PNB Housing Finance, Mr. Hardayal Prasad, who's with us. Good morning, sir. Great to get perspective from you on what's just transpired at your company. It's been a bit of a mixed quarter. You know, there has been some pressure on the NII front and on the profit front. However, some of your spreads and margins have shown an uptick. So does this have anything to do with cost of funds, and what are the variables that really came into play this quarter?
I think given these circumstances and given what the COVID once in a century kind of an event, overall the performances are pretty good. And if you really look at our spreads and NIM, both of them have improved significantly. The NIM has gone up to almost about, there's been an increase of about 20 basis points, and it has increased to 3.2 from 3% of Q3 FY20. I think if you really look at it, it's a good improvement that we have been able to bring in. In the spreads also, the company has done pretty well in terms of maintaining a spread of 2.9. as against almost about 2.53 that was there in Q3 FY20. I think both of them we have seen that because of the reduction in the cost of borrowings, because of the reducing interest rate regime that is there, and a lot of effort made by the company to reduce the interest rates from our borrowings, we have seen some very positive impact. We have been in the securitization market for a long time, and we have a significant amount of securitization that we have done of our books. There has been a good positive impact of that as well. All these things put together have contributed towards a good NIM as well as improvement in the spreads also. The profits are flat at this stage, but I think maintaining the profit at that level and ensuring that the book remains very robust and profitable, I think that's very important for us, and the growth has been quite good if you really look at it.
There seems to be pressure on asset quality if we look at the pro forma NPA. Is that the reason for higher provision?
Our overall GNPA stand at almost about 2.64, which is after the freezing of the NPA, and since there is nothing that is flowing in, the net NPA, the gross net performing NPA stands at almost about 2.4. We also have built into the our overall balance sheet as well as the provisioning requirements to take into account the pro forma NPAs. Now, anything that was in stage 2, we have, and there is no repayment that is coming in that. We have provided for that, and we have declared a pro forma NPA at almost about 4.47. If you compare all the HFCs, you would find that the provisioning that we do is pretty conservative, and we have gone ahead and dedicated ourselves for any future losses in case they come. Once the unfreezing of the Supreme Court verdict takes place of the NPA delinquency, marking them as NPA. So overall, I think the company is very, very prudent in terms of the way it handles its provisioning requirements. And the increase that you see is purely because of that. It is not necessarily, we don't think that all these accounts will flow to NPA. Once the judicial forbearance is removed, the administrative machinery in various places allow us to enforce the SARFAESI and other measures that are required to be enforced. I think we should be able to recover significantly. But today, as we stand, we have decided that we remain conservative in terms of our provisioning, and that's one of the reasons why you will find that the provisions have gone up to some extent.
Right, so thanks for explaining that. And, within the pro forma NPA, while we're on the subject, what's the nature of these accounts? Are they partially paid up? Are they salaried or unsalaried clients? Could you shed a little light on that, please?
Now, we have, if you really look at the NPAs and the pro forma NPAs, I would talk about it. It is in both the salaried class as well as in the non-salaried class also, which is the self-employed, the merchant categories, the lab book, which is part of both of them. So in fact, it's not necessary that you find NPA only in say salaried or non-salaried. I think more importantly, when we slice the data, what we have seen is that there are some segments where we are finding the stresses. And these are the segments which all of us are aware that the COVID affected them badly. For example, garment exports, auto and auto ancillaries, jewelry. Now, these are some of the segments where we have exposures, and that is where we find that there is a little delay in terms of giving the money. In fact, because of the freezing of NPA, we find that people who had never ever actually defaulted in last about 24 to 36 months pre-COVID, they have also said to us that they'd like to wait for the Reserve Bank of India verdict to come out. I think overall, if you look at it from the security point of view that we hold against the loan, we are pretty good. So in case of any eventuality also, I can go and get back the money. But right now, there is a big flux and people are waiting for some regulatory as well judicial guidance that will come. And any day it could come. The moment it comes, I think we are ready. Our machinery is ready. We are very confident.
Finally, if you could leave us with a comment or two on what you expect from the union budget. Monday is when we're expecting it to be announced. So as an insider of the housing space, what do you expect, or what are your key wish list items on the list this time around?
The government, Poonam, has done significant in the last few months also. In terms of rolling out the stimulus packages and ensuring that the last mile funding is available for some of the stressed construction activities that is there. That's one of the major things that has been done. Secondly, the government has also announced, and the Prime Minister has very, very clearly said that he wants housing for all by 2022. I think these are some of the signs where we expect that in the budget, there may be certain amount of new measures that may be taken. It could be in the income tax relief that they would go. maybe under 80C, new provisions could be added. If something could be done on the REIT investments, something could be done on the principal and the interest. I think these are some of the things that will stimulate the growth. And once the construction activity starts kicking in, and in case there are some advantages and benefits given to the construction activity and the real estate in particular, I think the economy will also have its own rebound, because construction activity, real estate activity has an effect in almost about 100 industries. And we are expecting that if those kind of measures are taken in the budgetary announcements, it will go a long way in kick-starting the real estate business.
All right. Well, thank you very much, Mr. Prasad, for joining us this morning. Great to get perspective from you on what's happening at PNB Housing Finance. Time for a quick break here and Buy Now, Sell Now. We'll be back shortly, catch up with some more banking management and then address our viewer queries today. Stay tuned. The Buy Now, Sell Now here on ET Now. We've been catching up with a host of financials managements this morning. We just had PNB Housing Finance, we had Bank of Baroda earlier. Both those stocks were under a bit of pressure today, and Canara Bank as well, no exception, currently facing a bit of a tough day in trade, the street digesting those numbers. Of course, operationally it was a fairly decent quarter. There has been turnaround to a certain extent, but you know, the pro forma NPAs are what's kind of on everyone's mind right now. So we have LV Prabhakar joining us, who's the MD and CEO. Good morning, sir. Thank you for taking out the time to talk to ET Now. Let's get right to it with the pro forma NPAs. They are quite significant and you know, fairly higher than your reported NPA. So what exactly were the provisions taken against this? To what extent are you provided? And are we at the peak of recognition, or you know, is a similar trend going to continue for the following quarters?
Yeah, pro forma NPA, as I said, about 10,000 crores amount will be classified as NPA if we really implement the IRAC norms. And this comes to about 150 basis points as on date. So whatever gross NPA which we are showing today at 7.46, it will be at about 8.95%. As far as net NPA is concerned, there will be an addition of about 8,000 crores. In the present, we are at 2.64. It may go up to 3.95. Our guidance is for the future, gross NPA will be around 8.75% and net NPA will be less than 3.95%. And we have made adequate provisioning for this, in the sense, initially in Q1, we did about 1,038 crores of provision. In Q2, we did about 125 crores of provision. And in Q3, we have made about 750 crores of additional provisioning for this one. So put together everything, it comes to about 1,901 crores as floating provision. And apart from this, on this pro forma NPA, we have an interest component of about 413 crores. This time, we have not booked this 413 crores into our P&L, and we have reversed this amount as far as the balance sheet is concerned, as a very prudent measure. So going forward, we are hopeful that gross NPA will be keeping less than 9% and the net will be less than 4%.
Right, sir. Thanks for that. So, you know, conclusively then, what's the outlook on asset quality from here on out? I know you just mentioned your NPA number. Could you just repeat that for us, please? And then within your retail book, are there any signs of stress creeping up, or is this limited to corporate?
See, our step towards not recognizing 413 crores as income itself shows that our actions are very calculated and to absorb any shock that may come in the future, and to make our balance sheet very stable and very strong. So going forward, as far as Canara Bank is concerned, I think our NPS level will be, as I said, gross will be less than 9 and net will be less than 4.
Could you also provide an outlook on credit growth? How's the retailing book growing, and the housing book as well?
As far as the domestic credit is concerned, as on date, we have grown at 7.55%. and our guidance is we will be somewhere between 6 to 8%. And overall credit book, including the global book also, will be growing at a 6 to 8% as far as credit is concerned. Then regarding the retail, yes, we are doing very well as far as retail is concerned. We have grown at 9%, and out of this retail, housing we are growing at 13.3%. And going forward, I think we will be crossing 10% as far as retail is concerned, and housing will be crossing more than 15%.
Okay, and what is the current capital position? Are you comfortable for growth over the medium term?
As far as Canara Bank is concerned, I think you know very well that we have raised about 2,000 crores QIP through QIP, and then 81 bonds also we have raised more than 2,800 crores. And as on date, our capital adequacy is about 13.69%, and CET is at 10.45%. So I think as on date, I am comfortable with the capital, and I have a regulatory capital as a growth capital. However, going forward, yes, for growth, I will be requiring capital, and at an appropriate time, we will be coming to the market.
All right, then thank you so much, Mr. Prabhakar, for joining us this morning and helping us understand the position of the bank in terms of financials and what's the way forward. The stock, however, continues to sulk, down 3.5% as we speak. Let's slip into a break right here. When we come back, we'll touch base once again with our market guest.
Hi, welcome back to ET Now. You're watching Buy Now, Sell Now. As we wind down the show, we have two queries to address. Our experts are still with us. Sorry to keep you guys waiting the whole show, and appreciate you giving us your time. First query, Route Mobile earnings today. Harsh Mehta's invested at 1,000 rupees a share. Would like to know if he should stay invested. Kunal, technically, any reason to exit Route Mobile right now?
Not really, Varun. I believe that the stock is a hold. In fact, last week also we were discussing about the same stock when it was at 1150, 1125 levels. And I maintained the stance that it's at a strong support level. And the chart patterns look attractive. So whatever little history the stock has shown in terms of the chart patterns, I would suggest that the investor can hold on to the stock at 1275, 1278 levels. You can expect at least another 10% on the upside over the next 3 to 6 months.
Okay, Ashish, your view on Route Mobile?
In fact, I have recommended this stock on various occasions at your channel from 800 rupees, and I am very bullish as far as prospects of Route Mobile is concerned, because I find that with changing digital economies, there's plenty of scope for companies like Route Mobile, because they are into CPaaS and value-added services into the mobile space. So whatever the OTPs, etc., that you get, everything comes from their platform. And OTP is something now you need to use it whenever even you enter into a building. So plenty of scope is there on their business prospects. And if we see globally also, their peer sets are quoting at much higher price earning multiple. So this is a business of future. That is why I'm very bullish on this, and I recommend a price target of 1500 by the next quarterly results when they come. So stay invested.
Okay, moving on then to our next query. Divya Koradia writes to us from Mumbai. They've bought Axis Bank before the results and want to know what is the street view and whether he should continue to stay put. Well, if he has bought last week when the stock had cooled off quite a bit, it clearly has paid off. Today the stock is up almost 4% after the numbers. But Kunal, what is your understanding of the charts for Axis Bank? Should the viewers stay invested?
Viewer can stay invested, but I think if it's a result-oriented trade, which is what I'm sensing from the query, then I believe that the near-term upside could be maybe another couple of percentage points, and probably around the 666 mark, 672 mark. I think there should be a lot of hurdles for the stock in the very near term. So if it's specifically regarding the results kind of a time frame and a strategy, then I would suggest that maybe another percent or 1.5% higher from current levels is where the viewer can look out to book profits, and then again wait for significant corrections I think 620, 625 seems to be now a very strong, reasonably strong support territory for Axis Bank for the very near term.
Thanks, Kunal. Ashish, this trade seems to have worked out well for the viewer. Should he book and get out right now? Even brokerages this morning are quite torn on the Axis result. What's your take?
Continue to be bullish on Axis Bank because the way economy is again picking up, the major beneficiaries are going to be Axis and ICICI. This quarter, there was some lag because of the higher provisioning what bank has done. But it's a good next quarter onwards, we are not going to see that higher provisioning. At the same time, what market is liking is net interest income, which has shown a 14% growth, which is quite positive. So I'm bullish on Axis Bank and I'll advise to remain invested. My target for the stock is 700 in short term.
Okay. Thank you both for joining us and helping our viewers out as well. With that, we're timed out on this edition of Buy Now, Sell Now. So it's a goodbye. Thank you for watching.